there's something that you talked about that is sort of taboo, and that's something called investing in life insurance. And you said that people don't want to talk about life insurance.
Right. And I mean, this is the thing. Yeah. It's not taboo to do.
No.
It's taboo to speak about.
Yes.
I'm a huge proponent as life insurance is an investment vehicle. And a lot of people are. But when I try to bring this up to other people, friends and family, just like, oh, you might want to look into getting, a life policy, that can be your kind of private pension plan. They look at me like, what are you trying to sell? Are you, is this multi-level marketing? What's your cut? I'm like, no, it's just a good deal. What you do, this is how it works. You put your money into a whole life policy that has a death benefit, and it has
your own life policy.
Yeah, you buy.
Okay.
I mean, this is the simplest version, and we talked to Bill Loftus about a very complicated version for high end people. But your simplest version,
PPLI.
Yeah, PPLI, private placement life insurance, inside various trusts. That's a little bit more complicated, but for just a regular person, this is one of the best things to do around, and it's very simple. A whole life policy is that type of policy that is not the term. A term is you're renting a life insurance policy for 10 years.
Okay.
So it's very cheap because after that 10 years, you have not died. Guess what you get? Big fat nothing. Okay.
But
with a whole life policy is that the money you're putting in there, it's invested by the insurance company, and those investors at the insurance companies, and you talking about your big insurance companies like Transamerica, Pacific Life, Mass Mutual, Northwestern, Guardian, all these guys, all the people investing that money, they're all really good. They're all really good. There's not any one of them that is bad. It's like the insurance industry gets the best of the best working for them, because if you look at their returns year over year, they're beating the pants out of a lot of funds.
Right.
They just beat the pants. A little bit more conservative. You're not going to have your big swings, but they're just getting these payouts that are just incredible, and they're growing and they're growing. And you're saying, well, what's the point of that? What's the point of that? Well, what's that doing? It's building your policy value.
Okay.
That your policy value is building a cash value.
Okay.
There's a cash value. You could say, well, this policy is worth this. If you wanted to sell it, you could. I would advise against it. But what you want to do, as your policy is building value, as you say, reach 65, you borrow money against it. Okay. And that money you borrow, if you're taking a loan, right? When you get a loan for one of your for your horse ranch,
Yep.
Claudine, when you got that loan, did they tax you on that loan? No.
Oh.
No, the loan proceeds, when you get a loan.
Okay.
Right.
I'm sorry.
You're getting a whole bunch of money.
Yes.
But it's not taxable.
Right.
Oh, that's the way I like it. I mean, unfortunately, you got to pay that loan back, right? Well, when is that loan paid back? Well, you could pay it back during your lifetime, or you could just wait for Mother Nature to take its course. When you die, that loan is paid back from the death benefit.
Oh, wow.
And we know death benefits are typically non-taxable because of that strong life insurance policy in Washington, D.C.
Right.
So that is how you get around a lot of the taxes that trap people. That trap the income tax and also the estate tax.
Okay. So what percentage of it can you borrow?
A lot.
Okay.
I really don't know. I would have to look at that, and I would have to give a qualified answer that I'm not a licensed life insurance seller.
Yep.
Yeah.
And then, what else did you say that? So when you die, there's no taxes
Right.
on that at all?
No, it's life insurance.
Wow. IRSMedic, the law offices of Parent, and Win, LLP. Real tax attorneys for tough tax problems.